All right, welcome. It is Friday, May 21. I'm recording this about an hour and 15 minutes before the market closes, just because I'm not going to have an opportunity to do it a little later today. What we're seeing prior to the close today is a little bit of fading from previous highs. We're looking here at the IWV, which is the Russell 3000 ETF. Now, I often show you the S&P 500. Not really my favorite index because everybody calls it the benchmark index, and that's just a pet peeve of mine. All you can benchmark is large cap US stocks. So this is 3,000 US stocks, definitely a much broader universe, obviously includes a lot of mid caps, a lot of small caps. You're not going to get those nano caps, those penny stocks, but you are going to get smaller stocks. So this is kind of a more indicative of what the broader market is doing. So if we kind of zero in over here today, we see thus far in today's session, high of 249.04, low of 247.25, and it's currently not much above that low, 247.40, so kind of fading. If we do see some sell-offs towards the end of the session, we could actually end the session lower. Remains to be seen. Let's take a look at the SPY S&P 500 ETF, and you're seeing the very same phenomenon here. High of 418.20 today, low of 414.45. So, not so much close to the bottom on this one, 415.48. Right now, less than a percentage point higher. So, not so great right now today as we're seeing. This morning over at Market Beat, I wrote about Deere, which reported earnings today. Really a blockbuster quarter. I'll go over to a weekly and I'll show you the earnings over here. So we had earnings per share of $5.68. That beat estimates, 169% year-over-year gain. You see acceleration in the past couple of quarters, so that's pretty good. And you see over here, revenue came in at $12.1 billion. Now, this is interesting. I've shown this with a few other stocks as well, various sectors. You see that we had some kind of slowdowns over here. You had an earnings slowdown in the quarter ended October 2019. Then you had a revenue slowdown in the quarter ended July 2019, some single digit revenue growth over here in late 19. Then the quarter ended in January 2020, which, remember, January 2020 was kind of normal. Okay, right? It was before all this crap, all this garbage got started. Okay, so, but even before the pandemic, all right, we did see that companies were seeing an economic slowdown. And I've really begun to rethink this a little bit more, that, well, wait a second. Did the pandemic just hasten what would have happened otherwise? Now, we see that with things like the adoption of working at home, the adoption of so many digital technologies. Did it also hasten a recession that might have come in 2020 anyway? Now, we will never really know that. You can model that all day long. We'll never really know. Is it also hastening the recovery, however, as, there was pent-up demand on the part of businesses, of consumers, more so than even the economic forecasters ever thought last year, which is what's causing all these bottlenecks and shortages and inflation right now? Just a lot of things to think about, but I do find it interesting that a company like Deere was having a slowdown. Now, of course, with the rebound in the economic activity, they are saying that the semiconductor shortage is going to hurt them with their equipment making, of course. They are also saying that they are paying more for materials like steel. On the other hand, what they said in their earnings report today was that the increased sudden demand for materials is driving more purchases of their equipment. Okay, so kind of a double-edged sword there on the part of Deere. Let's take a look here at a few other stocks, just what we've got today. you know, the market has been pretty choppy. Here's something called Claris Corporation. It's outdoors. I mean, we know that's just been a pandemic winner. Anything having to do with sporting goods, outdoors. Let's scroll down a little bit and we can take a look at what has happened here with earnings. You see, absolutely, just a really strong turnaround in the later part of 2020 and earlier this year. So we're seeing that in here in the stock called Claris. It is up, let's see, that is almost 7% today on this one in monster volume. Now this one is a very small stock, 712.9 million market cap. You know, this is the kind of thing that'll come up on your screeners if you're looking for something that's up big. And there are a lot of things. I noticed something else too. Boot Barn is interesting. And that is Western gear, work apparel. I would argue that a lot of it is fashion as much as it is work apparel. I've been to Boot Barns in the Santa Fe Place Mall in Santa Fe, New Mexico. I have been to the Boot Barn. Not sure I ever bought anything there, but I've been there. So again, you see here, for whatever reason, is it work apparel? Is it leisure apparel that people are starting to buy, kind of getting out and about again? Possibly, who knows? But in any event, we're seeing sales pick up here in this case, and this stock is up. Let's see there. It is up 2.92% today. Let's cruise over to a 5-minute chart. Yeah, that did look to me like it was a gap up, and indeed it is. Lost a little steam mid-session, kind of going into the end of the day here, holding up pretty well. So we'll see how that one works out on Boot Barn. And that one, again, that's a retailer, you know, market cap of little north of 2 billion, so not huge. And it's often surprising to people that some of these retailers, you know, with these brick and mortar physical locations, are not these huge market caps. And of course, like everything else, I'm sure that Boot Barn is doing a lot more sales online these days. That is here to stay. Let's take a look at one more time before I leave for today. Really just wanted to kind of illustrate some of this choppy action we got. Really has gotten pretty ugly ever since, well, it got ugly over here actually, kind of in the later part of April, then got uglier again back on May 11th. So it's just been pretty ugly. The news about inflation, I think, is scaring a lot of investors. The crypto had an effect a couple of days ago when China came in, said it would crack down, and now the IRS is going to be looking at it as well. And, you know, we're seeing a lot of heavy downside volume, couple of days of big downside volume here, big days of downside volume here. What I'm not really liking about this recent action is the big days of downside volume kind of, you don't have the equal number of heavy days of upside volume. In other words, you're not seeing a lot of buying when the market moves higher. Kind of shows you a lack of institutional conviction, which kind of makes sense right now. There's just a lot of uncertainty. I mentioned the supply chain shortages a few minutes ago, inflation, a lot going on right now. We're not in any kind of terrible danger zone, of course, but it's not great either. At least we're seeing the SPY here, the S&P 500 ETF, holding above its 50-day moving average. That is a good sign. And I liked that the other day. I mentioned that in a video twice recently. We've seen it pull back, get support right there at the 50-day line, then bounce back up. So that's so far so good. Right now, it looks like it's a little bit above its 10-day line. You know, it's okay, but not great. Kind of an awkward time to be buying right now with some of these stocks, just because there are very few sustained uptrends that are really showing you that the institutional investors are back in force, back with conviction. Might just have to wait this out for a little while longer before deploying some capital in a very serious way. All right, That is what I wanted to show you today. Thank you so much for watching. Enjoy your weekend, and I appreciate you.